I am dreaming of a new BMW X5. Not sure if I should get it. It's only $699 a month. Very affordable. So today I'm going to be speaking about BMW car, brand new. You can choose your own color, or BMW stocks, or generally investing. So stick with me. I'm going to explain to you what I am thinking and what I'm seeing. So see you soon. Welcome back to Family Investment. I got so exciting waking up on a Saturday on my Facebook, scrolling as the usual, and then there's a BMW advert popped up. Great deal, BMW X5, $699 a month. So let's watch it together.
Hi, my name's Nick from John Clark BMW. I'd like to tell you about this exciting offer we have
Exciting offer.
BMW X5. It's a $699 deposit, $699 a month.
It's a nice blue one. I like that blue. You can choose your own color.
The car includes wireless charger for your mobile phone.
Wireless charger. I don't even have a phone that wireless
Color
charger.
head-up display, touchscreen navigation system, BMW air suspension with 3 different settings.
Whatever that means. Sounds cool.
The car parks itself. The inside of an X5 is truly like no other.
I like leather seats. My kids can spill all their milkshake all they want. Nice rims. Nice.
BMW X5 with its muscular and aesthetically pleasing design, coupled with class-leading driving dynamics. This car can be yours for $699 deposit, $699 a month. There's never been a better time to buy John Clark BMW.
That's brilliant. That's brilliant. Wow. I've always wanted an X5, even better than an X6, but I always thought it's a tad bit expensive, that you need a large deposit. But this one, $699 a month, and you get your car for £699 a month. It's really, really affordable. You know, back in the day when my dad brought me to a BMW garage, you needed to pay full down payment, but now you can break it down in installment. But it doesn't sound that easy though, so I want to break it down what it exactly tells you. Okay, so I've got this screen up here. So it's £699 a month for 48 months, so 4 years essentially. So the car itself costs £65,000. Okay, £65,000. Okay, then you got contribution, blah blah blah, whatever they tell you, charge, whatever nonsense. I don't care. But after 48 months, you pay $699 a month. You still owe an optional payment of £27,000. So it doesn't mean that you pay up the car, but you've got a big lump sum at the end that you have to pay. You've got limited mileage, and then you've got 2.9% APR, which is really, really low because the interest rate is almost zero. You're paying 2.9% on the car. Normally it's about 6 to 11%. And they're making the car really affordable, really cheap for anyone to drive away. So I'm not surprised in the next couple of months that people will be driving out loads of BMW X5 on the road. And the great thing about new cars is you can choose your color, the interior, you know, the cost will escalate. But hey, it's once in a lifetime, is it? So today, the motive of the video is to compare buying a car for $699 a month, or out of this timeline here, number one, buy a dividend growth stock. Or second, buy a growth stock. Or third, buy S&P 500 index, or the last one, buy BMW stock itself. Dividend. Not necessarily must be a growth dividend, but pays you regular dividend. So today's example I'm going to bring is GSK, GlaxoSmithKline, who pays 4 times a year dividend. The overall in the whole year, they pay about 4.5%. 4.5 to 5% depending on the price stock. So I'll choose 4.5%. What happens if you spend $699 on GSK every single month for 48 months? So for 48 months times $699 is a total of about $33,000. Okay, the figure is about $33,000. So I want to see whether you can beat the $33,000. Investing on a car or investing in stocks. So from my calculator here, as you can see, 4.5% growth, 2% average yield, because GSK is not really a growth stock. It goes really slow, but it pays you dividend for you to grow every single year. So after 3 years, after that 48 months, the calculator shows that you will have £37,000 in 9 So it'll be 37 grand. So if you invest in a dividend stock, rather than buy a car, £33,000, you get a difference of about £4,000 or $4,000. That's the difference if you get a GSK stock. And the next one, what if you invest in a growth stock? Some people might want the risk, some people might be younger, you can afford the risk and afford to lose. And make it easy, don't go for penny shares whatsoever. Let's go for one of the FANG stocks. You can see like the likes of Apple, the likes of Facebook, the likes of Netflix. The last few years, they've grown almost 25% every single year. There are ups and downs, but if you average it out, it's almost 25%. So on the calculator, again, the same thing. I put an expected increase of 25% every year. It's only a short 3 years. You get a staggering £48,362. No dividends paid but growth. If you pick the right one, of course, that goes up in the right year in the 3 years. Let's say you decide to go index. I'm not a stock picker. I don't know which one to choose. Let's go S&P 500. S&P 500 are known to grow an average of 9% in the last 90 years. 9% increase and 1% dividend because some of the dividend yields in there. So I plonk into the calculator, you get 38,930. That's still more than the £33,000 figure that you pay for a car. And still more. You're winning. You're winning. You're on positivity. What if you buy BMW stocks instead of a BMW car? Again, $699 every single month. Promise that you put it in, buy stocks. Okay. I have got two scenarios here. Let's say if we are on a good trend here, 4% dividend. Yes, they pay 4% dividend. Very generous of BMW German car. Let's say expect an increase of 4% every single year for the next 3 years. You will get, the calculator show here, £37,831. Okay? But what if it drops? What if for the next 3 years we lose 2% every year? The stocks will be dropping from here. And still, if you put in a calculator, 4% dividend yield is still offset. You still be in positivity. You have 34,603. You still make more money than you spending every single month on a car, as you can see. So both, it's still a win-win because of the 4% dividend stocks from BMW. Before I go into BMW analysis, this video is sponsored by StockCut.io. Yes, I've got a partnership with StockCut.io, and today I'm going to use StockCut.io to bring up the analysis for what I think and what AI can tell me about the BMW stocks. On the starter screen, you can see fair growth potential, stable operation. Yes, it's German efficiency, stable operation. It's underperforming the market. Yes, it's definitely underperforming the market. The stock price is really low. The last few years, it's always been above 70. Now it's dropped because of COVID-19, because of less cars being sold during this year. And its class is an undervalued stock, which I agree as well. BMW is definitely an undervalued stock. It should be on the region 70. But then again, it's electric vehicle portfolio. It will take years. It needs a lot of money being pumped into the electric vehicles research before they can make money. So for the next few years, it could be a bit rocky for them. And then if you go, it's still on fair growth potential. It's a cyclical stock. Even though they pay defensive dividend, they're not defensive. They're still cyclical, as you can see, COVID-19. Profitability, as you can see, on stable operation, on profitability growth, its last few EPS is £2.78 positive, last 12 months. So in terms of making profit and gross margin, 15% growth margin, BMW sells car. It's not a luxury car, but it's not a Ferrari luxury car, but the margin for profit margin is higher than normal, like Toyota or the Hyundais or the Asian cars. So gross margin is good, pretty good for a reputable German car maker. And it's underperformed the market. As you can see, the last 10 years total, they have completely underperformed. It's a stock that's not favored by institutional investors or dividend yields. It's gone really down. It's not, it's not a sweet spot of the market no more like what it was 10 years ago. And undervalued stock, it is. It's compared last 12 months price to sale ratio, stock price of 0.4. It's 0.7 times its book value, 0.75. It's way below, and PBV ratio is 0.21. It's for a company that's capped, that has dropped such in price, it's become so affordable, but there's no momentum. You know, there's no positive sentiment trying to push BMW stocks higher. Investor sentiment, this is where you see the momentum, the RSI. As you can see, chalk-in money inflow, yes, it's 0.11. It's still on the green. It shows that there are more people starting to buy because a bit of recovery once bottom low. But the simple moving average, the RSI, it's just not moving. It's pretty much stagnant. It's pretty much stagnant. So BMW stocks, great for dividend, great gross profit margin. There's just no momentum push, but it might be a good time to buy because it's undervalued. But then again, you have to look at your overall portfolio, and then again, you have to look at the likes of Tesla. If you've got like 50 grand, 10 grand to be investing, I'd rather put my money in Tesla because of the momentum. I'll make money quicker in a shorter amount of time rather than 4% growth every year. So it's something to think about, whether you want undervalued, no momentum dividends, or do you want great momentum like the likes of Tesla. So it's something to think about. So that's me. The video is sponsored by StockCut.io, and that's my analysis, and you can click on the link below to get more detail, or you can sign up to the premium account. Like what I use is on a premium account here, the VIP account that I use. These are my final words, okay? These are my final thoughts. So people who buy a BMW X5 are normally people in their 30s, you know. 30s, having a family, young family, and you need a car. Enough for you to drive, enough for you to go camping, long drive comfort, safety factor. You know, X5 ticks the box. And then think about it. If you don't buy a BMW X5, and for the next 20 years, because if you buy a BMW X5 for 20 years, you always either swap a new car each time. That size of car is that size of family vehicle that you need. But what if the 699 that you were supposed to pay for a car, instead you commit yourself on investing for the next 20 years, between the age of 30 and 50? How much would the money grow for you? Okay, assume that you got BMW stocks instead of a BMW car, investing 4% dividend yield every single year, and then assume a 3% rise, a positive 3% rise in BMW stocks. They go into electric vehicles. How much will you get at the end when you hit 50 in 20 years time? I've done the calculation, and here you go. A staggering 378,974. So it's about 380 grand. Yeah. 380 grand, all dividend reinvested each and every time. So it's something that I want to plant in your head to tell you before you commit to such a big investment for a car they don't really appreciate, unless it's a Ferrari. This is where you're getting yourself into. This is how I think before I buy a huge purchase, before I commit myself on $699 a month for a product. Is you commit to, you have to pay. But what if you just switch even a small $299 or $399 a month on investing? Think about it. It will make a huge difference. 380 grand for just the next 20 years. I'm not even speaking about the next 30 years. What will happen? What if you start sooner your investing life at the age of 20? There's something that we have to think about in compounding, the power of compounding factor. So this is me. This is for me to plant the seed in your head. It's for you to think about and for you to consider before making such a huge investment, either to buy something or a proper equity investment. So thank you very much, and hope to see you soon.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share this video to help us grow our YouTube channel, yeah? Yeah. Alright guys, 3, 2, 1, bye bye.